Hello and welcome. We're bringing you an absolutely essential briefing prepared by the tax experts over at ProTax Accountant. We're talking about the 2025 autumn budget because it laid some pretty sneaky tax traps for 2026. And in the next few minutes, we're going to show you exactly what they are and, more importantly, how you can sidestep them. So let's just get right to the heart of it. Could your business, right now, be unknowingly walking straight into a major tax trap in 2026? You're going to want to stick around because for a lot of you, the answer might be a very surprising yes. You see, while all the big, flashy headlines were grabbing everyone's attention, the government quietly slipped in some very targeted changes. These aren't the things that make the front page news, but trust me, they're the ones that could end up costing your business thousands. And I mean thousands of pounds if you're not ready. Our mission today is to shine a massive spotlight on exactly what you need to watch for. So, here's our game plan for today. First, we'll map out this new tax minefield. Then, we are going to expose 3 huge traps. One that affects your equipment, one that involves your people, and a third one that's all about your paperwork. But most importantly, we will finish up with a clear, straightforward strategy to help you navigate all the fallout. Okay, let's get into it. Section 1, the 2026 tax minefield. It's time to really understand the new landscape that your business is going to be operating in. You know, the real danger for small businesses isn't some giant sweeping reform that everyone's talking about. No, it's hidden away in the small print. We're talking about these little targeted tweaks to things like how you claim for your equipment, new rules around employment, and a massive, massive push towards digital reporting. Now, on their own, they are so easy to miss. But when you put them all together, they create a whole new world of risk. And that brings us perfectly to our first major trap, what we're calling the equipment squeeze. So if you're planning on buying any new assets for your business, laptops, machinery, even just some office furniture, you need to listen up because from a tax perspective, it just got a whole lot more expensive. Now look at this. The change looks so simple on the screen, right? Just a few percentage points. But the impact is huge. The writing down allowance for what's called the main pool of assets, and that's most of your day-to-day stuff like computers, office gear, and machinery, is being slashed from 18% all the way down to 14%, starting in April 2026. So what does that actually mean? It means you'll get less tax relief every single year on the very equipment that you rely on to run your business. Let's make this real. Let's put some numbers on it. Imagine you're a freelance web developer based in London, and you go out and buy a brand new high-spec laptop for £5,000, okay? Under the old rules, your first-year tax deduction would have been £900. Not bad, but under these new rules, it's only £700. That is an immediate loss of a £200 tax deduction in the very first year on just one single piece of equipment. Now imagine that across all the assets you buy. It adds up, and it adds up fast. But, okay, here's a pro tip for you. It's not all doom and gloom. The annual investment allowance, the AAI, is still in place, and that still gives you 100% relief on qualifying assets, all the way up to £1 million. So what's the takeaway here? Well, it means that strategic planning for your big-ticket purchases is now more critical than it has ever been, so you can make absolutely sure you're maximizing that AIA limit. All right, so that's your assets covered. But that's not all, not by a long shot. Here's where things start to get really complicated for you and your team. Let's dig into trap number 2, the people problem. This is all about the new rules that are going to affect your remote and your contract staff, and these could seriously increase both your costs and your admin headaches. So this breaks down the key changes hitting you. First up, that simple tax-free £6 a week allowance for working from home? Well, say goodbye to that. It's being abolished from April 2026. Second, and this is a big one, if you use contractors through umbrella companies, more of the responsibility for their tax and national insurance is being shifted onto you, the client. Third, the national minimum wage is, of course, going up again. And finally, you need to get ready for mandatory payrolling of benefits by 2027. Every single one of these adds a new layer of cost and paperwork. And stay with me here. The next point on umbrella companies might genuinely surprise you. Now, you might be asking, what on earth is an umbrella company? Well, to put it simply, it's a company that acts as an employer for contractors. The massive change here is that HMRC can now come after the end client, that means you, for any unpaid PAYE and national insurance if that umbrella company fails to pay it. This is a gigantic shift in liability, and it puts the risk squarely in your court. And hey, don't just take our word for it. This quote from the experts at Safri in their budget analysis says it all. They are advising, in fact, they are urging any company that uses umbrella companies to urgently contact every single person in their supply chain to figure out the impact. The risk of getting this wrong is now completely on your shoulders. So, we've covered your equipment, we've covered your people. Now let's move on to our third and final trap, and believe me, it's a big one. We're calling it the admin avalanche. This is all about the rising tide of digital compliance and the incredibly steep penalties for getting it wrong. Did you know this? Get ready for this number. Over 850,000 landlords and sole traders are expected to be pushed into the Making Tax Digital for Income Tax system from April 2026. That is a staggering number of small businesses that will now be forced to keep digital records and file quarterly updates to HMRC using specific approved software. And this slide really lays out the timeline we're all facing. From April 2026, Making Tax Digital for Income Tax begins. Now, the government has given everyone a 1-year grace period on late submission penalties, so they don't actually kick in until April 2027. But don't be fooled. The requirement to comply, to do all the work, starts in 2026. And if you look further ahead, mandatory business-to-business electronic invoicing is already on the horizon for 2029. The direction of travel here could not be clearer. On top of all that, HMRC is tightening the screws everywhere else too. For the first time since 1998, penalties for filing your corporation tax return late are going up. And there are brand new, very specific penalties popping up, like a £1,000 fine just for failing to appoint something called a reporting company for corporate interest restriction rules. The message is simple. Across the board, the cost of getting your compliance wrong is going up. Okay, we have laid out the minefield. I know it sounds like a lot to worry about, it really does. But now we get to the most important part of this whole briefing, navigating the fallout. Let's shift gears from warnings to empowerment, and let's look at exactly how you can proactively protect your business from all of this. The key here is to take action right now, not later. And we've got a simple 3-step plan for you. First, review absolutely everything, your plans for buying assets, your staff contracts, and your current tax filing processes. Second, you need to forecast the real-world financial impact of these changes on your cash flow for 2026 and beyond. And third, and honestly this is non-negotiable, you must consult a professional to build a solid, robust tax strategy. Now, we have to share a quick but really important note. The information we've gone through here today is for general purposes only. It's a guide, but it should not be the only thing you rely on when making financial decisions for your business. And that's exactly why, before you make a single decision based on this, it is absolutely vital that you consult the tax experts at ProTax Accountant. They can give you advice that's tailored specifically to you and your business's unique situation. So, I'll leave you with this one final thought. We've walked through the equipment squeeze, the people problem, and the admin avalanche. The real question you need to ask yourself right now is this. Looking at your business as it stands today, are you truly prepared for 2026? Please don't wait for the fallout to hit your bottom line. You can secure your business's future by getting ahead of these changes now. For expert, tailored tax advice on everything we've talked about and more, get in touch with ProTax Accountant today. You can reach them on WhatsApp or by phone at 07985689912, or you can drop them an email at info@protaxaccountant.co.uk. Thanks so much for joining us for this essential briefing.